Where next for the Fed and global central banks? Higher for longer was the message from Jackson Hole. Despite market pricing for interest rate cuts next year, Jay Powell framed the Fed as now being able to proceed carefully as we decide whether to tighten further or, instead, to hold the policy rate constant and await further data. Those are the two options, hike or hold. A cut is not on the table. And the Fed is looking at jobs more than ever because of a persistently tight labour market. Powell mentioned the jobs market 14 times in his Jackson Hole speech. He noted that so far job openings have declined substantially without increasing unemployment, a highly welcome but historically unusual result that appears to reflect large excess demand for labour. Further connecting employment to inflation, he adds that there is evidence that inflation has become more responsive to labour market tightness than was the case in recent decades, which allows him to warn that evidence that the tightness in the labour market is no longer easing could also call for a monetary policy response. So, in other words, he is now watching the jobs report rather than the inflation reports to determine when next to raise interest rates.